So SoFi stock is making everyone nervous again. The stock of this company soared over 120% in the past year, but right now after Q4 the momentum seems to be fading. The investors of this company were disappointed by the lower than expected 2025 guidance, while other analysts like Mizuho, for example, realized that they were too skeptical and raised target prices to $20 per share. Hey there and welcome to the Market Monkeys channel. It's Julie here, and in today's video I want to talk about different scenarios for SoFi stock in 2025. Did they achieve their limit growth, or is there still a chance that the stock of the company will reach this $20 or even more dollars per share in 2025, and everything that is happening right now, it's just a bump on the way. Today I will of course mention new updated target prices, I'll talk about the earnings, but most importantly I want to share what is our outlook for SoFi stock future for 2025. So let's continue to the analyst ratings. And most of analyst firms have very different opinions and very different expectations from SoFi for 2025. So as I already mentioned, Mizuho have raised their target price for SoFi to $20 per share, and this is the benchmark that all of the investors are very eager to see. UBS also raised their stock price target, but only to $14, while Goldman Sachs is neutral with $9.50 target. Bank of America increased its price target to $13 per share, but retained an underperform rating. JP Morgan maintained a neutral rating with an $16 target. And Needham actually also increased its target price, the same as Mizuho, to $20 per share and maintained a buy rating. What can I say? The opinions differ, but as more and more analysts will be raising their target prices, of course more and more retail investors will be comfortable investing money in the stock of this company, so of course it's a great news. By the way, if you find this information interesting or valuable, don't forget to support our channel by pressing a like button and subscribing. Everything until now seems pretty positive, but the question is, what is going on with the stock of the company? SoFi had lower than expected guidance for 2025 and even a nice quarterly results of the last quarter of 2024, and actually the nice results for the full year of 2024 couldn't save the stock of this company from the moods of the concerned investors. Those of you who watched our previous videos and my previous videos know that I always repeat the same thing regarding SoFi. Financial company cannot be growing the same as tech company. If SoFi was making nice progress in selling their financial tech, then yes, we could definitely say that the sky would be the limit for them. But from this quarterly results and from in general guidance for 2025, we see that they're not even planning on making any big breakthroughs. So in my opinion, it is only logical that their guidance for the growth is not as high as everyone expected. And this is basically exactly what happened. We see a very nice company, we see a company that is making nice progress, but the company that is concerned for their growth. In this earnings, we saw that 2025 EBITDA guidance is between 845 million and 865 million, and this is below consensus expectations. But here is the part that in my opinion is also very important. SoFi is growing, and in some ways SoFi is growing even more than everyone expected. And should we pay attention only at the guidance and only at the projections for 2025? I am not that convinced. One of the most impressive metrics that we saw in this earnings results is actually their growth in members and in products. The company now has over 10 million members, which is up 34% year over year, and they're adding new products at a record pace. But, and this is also very important thing, it's not that they're simply bringing more people to take their loans. By the way, financial services products now surpass lending products by a ratio of 6.3 to 1, up from 5.7 in 2023, and this is actually something that Anthony Noto is very proud about. He even said and mentioned this on his earnings call. And for us as for investors, it's also pretty good news, because it means that they're shifting their revenue streams to more capital light, fee-based, and this is something that in my opinion in the long run maybe could justify the current premium valuations of SoFi, and I'm not saying it often. And then there is, of course, their loan platform business, or LPB. And this might be one of the smartest decisions this company ever made. So instead of holding the loans and actually selling them, they are partnered with the companies like Fortress and Blue Owl Capital, and they started originating loans for these third parties, earning fees while keeping loans off their balance sheets. In 2024, this business originated $2.1 billion in loans, and it's basically just getting started. In the opinion of their CEO, if SoFi continues to expand this part of their business aggressively, this could transform this company, and this could actually bring them much closer to being a true, real fintech company. And by the way, there is also some important thing about this. CEO Anthony Noto even hinted that they might eventually push all lending into this model to become a higher ROE, capital efficient business. Regarding the tech of the company, SoFi Technology platform business quietly landed a huge deal. They were selected by the US Department of Treasury to support Direct Express, a prepaid debit card program used by 3.4 million federal benefit recipients. So this is another great piece of news, although I must mention that we won't see the revenues from this deal until 2026. But anyway, if SoFi will be able to expand this part of their business, if they will be able to close more deals like this, they will be actually much closer once again to being a fintech company and not a glorified lender, as some investors are calling it. Now let's talk about investing and crypto, something that many investors were concerned about. So SoFi will introduce alternative investing, including a fund that gives exposure to SpaceX and to some other instruments that were not available before. This is a huge difference to what they were doing before, and now it looks like they're working towards bringing in some very young retail investors. And from one point of view, it's a nice thing, because the competition in this field is huge. There are many banks, there are many platforms, there are many brokers that are trying to bring on as many people as possible. So the fact that they are trying something new, that SoFi is trying something new, that they're trying something different, is very nice. But of course, from the other point of view, right now we're not sure what will happen, how much revenue, how much money these people will bring, and how all of this will work out for them. Regarding crypto, by the way, they addressed this issue very quickly, and Chris Lapointe, their CFO, said that they are ready to go as aggressively as anyone, whatever that means, if the regulations will be plausible. So it basically means that SoFi already had crypto trading, and as I understand it, if everything will be the same as it was before, and if they will be able to work in a way that they did before, as Chris Lapointe put it, if they will be able to do this safe and sound as they did it before, they are ready to jump on this opportunity. But of course, everything depends on Trump administration and on what they will decide with the regulations regarding this. Regarding the stock of the company, I am still holding a very small part of my position simply because I like following this company, and I'm actually pretty interested in what will be happening with them in the future. But here I must also mention that my position in SoFi was quite bigger than it is right now. When the stock of this company reached the level of $17-18 per share, I sold almost all of this. So right now I'm holding approximately 2% position in SoFi out of all of my risky portfolio, which is not much. Vadim, by the way, in his previous video said that when his option position will hit again plus 400% in profit, he will sell and close this position completely. Since then, past approximately 2 or 3 weeks, his position indeed hit plus 400%, and he indeed closed his position completely. In my opinion, this company definitely has a bright future. It's not some crazy, volatile, unprofitable business. They are actually profitable for the past 5 quarters, and they just closed a full profitable year, which is also a great milestone, and it's actually something that makes me appreciate this company even more. Regarding the valuation, I'm sorry all, but right now I see this company more as an online bank. I'm not talking about what will happen in a year, in 2, in 3, and 5 from now. I'm talking right now, what we have for today. So for me, investing in an online bank that is trading 5-7 times higher than the sector median is a little crazy. Now here I need to mention that I am not looking to invest in this company for 3, 5, 10 years or more. Right now and in general on this channel, we're mostly talking about the stocks that we want to buy for the relatively short period of time, for a couple of months, maybe for 6 months, maybe for a year tops. If I would want to create this big position in SoFi and to hold it for 10 or for 15 years, and I truly would believe in this company, I would be buying the stock of this company regardless of the news, regardless of the stock price. I would simply put a reminder on my phone to buy X amount of shares every X period of time. For example, 50 shares every month or 50 shares every 2 months. It depends on the size of the desired position and on the amount of money that you want to put in this stock. But as of today, SoFi is not this company that I would like holding for a long time. I have some companies like this in my portfolio. I have, for example, Palantir, but this is a company that I very much believe in. And by the way, even though I very much believe in Palantir, I sold also some big part of this position because they're overvalued. I have Nvidia and Uber, for example, that I'm planning on holding maybe longer amount of time, but this is two pretty big companies that are currently undervalued. And SoFi for me is not the company that I love, and definitely not the company that is undervalued. By the way, it doesn't mean that if the stock of this company would right now go down, I wouldn't think about re-entering it. I am repeating again, I pretty much like this company, but the current valuation is too high for me. The decision whether or not to hold the stock of this company or to sell it right now if you are a shareholder is completely on you. It depends on your assumptions. It depends on your risk tolerance. It depends on many factors that you must decide for yourself. For example, me and Vadim, we are investing together. We are always discussing our investments, but me and him have completely different strategies. I sometimes invest in the companies that he wouldn't invest in, and vice versa. So this is very important point. Do your own due diligence. Don't listen people on YouTube, don't listen people on internet, and make sure that this decision regarding your money, regarding your investment, it sits nice with you, that you are feeling comfortable about this and you're feeling confident. Please don't forget to talk to us in the comment section. We're very appreciating it. We're very happy to chat with you. We always reply to everyone. And thank you for being with me. I will see you on our channel next time. Happy investing!